Have ourselves a choppy candle on the daily chart. It's a red candle, but it's a choppy candle. We closed a lot higher, a good amount higher than we did from last Friday, as you guys can see, and we got very close to hitting that 5 daily moving average as a support before getting some buying pressure intraday. And just like that, the SPY is back above the 5 DMA, and I was wondering, would the bears be able to break it down and give us that rejection? The answer was no, and now we are back above the 5 DMA, which makes it bullish once again. But we can also see that the 5 daily moving average was starting to slope downwards. It even cooled the RSI down. So we'll see if the 5 DMA is going to start curling back to the upside. As far as the price action goes, when I see choppy candles like these, I always like to look at the range. And we can see the last one worked out pretty well too. When we saw this choppy candle from last Thursday, we took out the high and it led to much more upside. So the plan is going to be the same. We watch the range of this choppy candle. I love trading doji candles because I'm a big believer that after the chop phase comes the expansion phase, the trend phase. And doji candles are big signs that, hey, we are chopping, but they usually only last for 1 day. Let's see if that trend can continue. Speaking of trends, if the trend will be bullish, we have to look at the high of today's doji. I do have a fib level at 664.5, but I'll be watching 665.28. That was the high of today's doji, and the low was at 661.86. So 661.8 up to 665.28. That is the range that I'll be watching tomorrow. Anything in between is a chop within a chop. But if we are to be bullish, I need to see 665.28 clear, whether it's a traditional breakout or a gap up. Either way, we're above it, we are bullish. 667.34 was the previous all-time pivot high. If that level clears, we can go to 669 and 670.39 for some new pivot levels at new all-time high territories. We do have a fib extension to the upside, but that's only possible if we clear 665.28. I do have support at 663, 661.86 being the low of the doji. If that level breaks down, it's a good chance that we are going to head down lower. That is how Uncle like to trade dojis. Whatever range we break is where Uncle will bet to. So if we break down 661.86, I think we can head down lower. I have a support at 660.8, 659.3, 657, 656, and 654.4. Below that, I would be bear bias on SPY because that's where the potential double bottom is. So if we break it down, double bottom invalidated. So remember to keep it simple and watch the range of the doji. 661.86 up to 665.28. Whichever way we break to, that is the way we bet to. QQQ also has its own doji. 597.4 is the low, all the way up to 602. So let's keep it simple. If we are to be bullish, 600 and 602 must clear, and that will send us to new all-time highs. 604, 606, and 607.8 would be my target. As far as the downside goes, 597.4 must fail. If it does, we break the low of the chop, put in 595.5, 594, 592.5, 591, and 589 in play. Let's keep it simple because after the chop comes the trend move. Here is NVDA. It managed to hit previous all-time pivot high. At least it got very close to doing it before we got a little selling pressure. We did manage to close above 180, making NVDA bullish to me. As long as above 180, I am bullish. And if we can clear 183 and 184.5 once and for all, it will be very bullish. 186, 190 or higher would be in play. The more we knock on the door, the more that door will get weak. And NVDA has been knocking on that 184.5-ish level for quite some time. And I think if it keeps up, it's going to break very soon, and my bullish opinion will be invalidated and it will change back to being bearish if and only if NVDA can break back below 180. Here is Tesla with its own doji candle. The range is 439.5 up to 451. That's a pretty big range, but as long as in between, we are neutral. To be bullish, 444, 448, 450, and 452 all must clear. So the high of Tesla's doji is at 451. So to be bullish, 444, 445.5, 447, 449, and 451 must clear, especially 451 for me to favor some more upside. The low is at 439.5, so support is right there. And if it breaks down at 439.5, we can expect at least an $8 move. I think we can get more than an $8 move, but we can expect at least an $8 move to the downside. Retest the 5 DMA or probably at least wash a little below it. IWM closing right around the 5 DMA. We have to watch that 241 level. It's been tested as support, it's been tested as resistant. It is the equilibrium level. If it breaks down 241, bears have a shot at some more downside with 239.5 and 238 back in play. I don't think 238 will hold as support if it gets retested again. I could be wrong, but I don't think I will be. But we'll find out only if 241 breaks down, and then we go hit that level. We'll find out if Uncle's theory will be true or not. But as long as above 241, the bulls still have a shot at more upside. They need to show some follow through, and that is to clear 243 and 245. If that happens, that is your bullish follow through. Here is Apple, also chopping, but it's getting tighter. It's starting to contract more, and the more it contracts, the more the expansion phase is going to come. It's going to get here sooner. So right now it's contracting, and we still need to watch that 5 DMA. I would trust the breakout if 255 clears, and that will put 256.7 or higher in play. I can't fully get bearish until we get that close back below 253.4. And for the M pattern to possibly play out, I still need to see 250.8 break down. And last but not least, here is the VIX. Guys, when VIX is below 16 or below the 5 DMA, I don't like it very much because volatility is low and it makes it day trading a little bit more difficult. Some people can handle it, some people can't, but low volatility makes it a little bit more difficult. So we need to see 16.2 clears, 16.13, but I'm gonna say 16.2. It must clear. That's around the 5 DMA, and that will put 17.3, 18, and 19.3 all back in play. I need to see it back above the 5 DMA. Otherwise, below it, we could head down lower. It wasn't the case today, but if it keeps on staying below that 5 DMA, the tendency is that it'll drift down lower, which would not be good for volatility. And before you guys go, here is the dark pool level, 1.4 billion in premium at the 663.52 level. Obviously above that would be bullish. And then there's 2.6 billion in premium at the 661.78 level. Above that, we can remain bullish and possibly get more upside. But I tell you, if we break down that level based on a dark pool level, I would definitely lean bearish. Guys, I hope you found value in today's video. Uncle loves you very much. Don't ever forget that you are a money magnet. We do not attract what we want. We attract what we believe. Peace.